Hello everyone. I, Karishma Suvarnikar, welcome you all on behalf of MI Capital Services to our new series on UAE corporate tax simplified for you. We bring to you a series of videos simplifying the proposed UAE corporate tax for your better understanding by sharing our insights on the same. So let's start without wasting any time. Today, I will be explaining about exempt persons, including applicability of corporate tax on free zone persons. As the proposed corporate tax is applicable to all companies, certain class of persons has been kept exempt from the corporate tax regime, and these are known as the exempt persons. Total 6 categories of persons have been kept out of it, and these are: number 1, government and the departments including the authorities and other public institutions. Number 2, government owned UAE companies. Number 3, businesses engaged in extraction and exploitation of UAE natural resources. Next comes the charities and other public benefit organizations, public and private pension funds, and lastly, investment funds. Now let's discuss in detail each of the exempt persons. Very first comes the government and its departments. Now the government typically works for the benefit of the public and their activities are mainly non-commercial in nature. They are therefore considered as exempt persons. However, government may sometimes conduct commercial activities either by themselves or with association with third parties. For example, the Abu Dhabi Business Center is a part of Abu Dhabi Department of Economic Development, which enhances business activity in its emirate and charging fees for the services offered by it. So, any non-commercial activities carried on by the government will be kept out of the purview of the corporate tax. However, any business activity carried out directly by the government under a trade license will be subject to corporate tax at the rate of 9%. Then comes the UAE government-owned companies. Now, the wholly government-owned UAE companies that carry out sovereign or mandated activity are essentially an extension of the government, with the relevant activities segregated from those of the government for management and accountability purposes. Thus, these companies will be outside the scope of the UAE corporate tax in so far of their sovereign or mandated activity conducted for the government. Next comes the businesses engaged in extraction and exploitation of UAE natural resources. Now, under the constitution of the UAE, the natural resources belong to the emirate where the resources are found. The extraction and exploitation of the natural resources is often done by the companies that are wholly or partially privately owned under a long-term concession agreements entered into with the respective emirate government. Now, these contracts generally provide that the profits earned by such companies are subject to emirate level taxation. However, the exemption granted only to the companies engaged in the extraction and exploitation. Thus, it will not extend to the suppliers, contractors, subcontractors used by the concession holder for selling these resources in the market. Now coming to the next exempt person, that is charities and public benefit organizations. The organizations which are formed to carry out social, cultural, religious, charitable or other public benefits can apply to the Ministry of Finance to be exempt from the UAE corporate tax. Now, whether an organization qualifies to corporate tax exemption is at the discretion of the Ministry of Finance. However, no exemption from UAE corporate tax will be available to organizations that undertake commercial activities that are not directly related to the stated purpose, or whose income or donations or any sort of income may be used for the personal gain of the persons associated with the organization. For example, for the benefit of foundation, for the benefit of the founders and fiduciaries. Now, lastly, the approved charities and public benefit organizations will need to comply with the periodic information reporting obligations throughout their existence to the Ministry of Finance to be an exempt persons from the corporate tax regime. Lastly comes the investment funds. Now, the investment funds are commonly organized as limited partnerships to ensure tax neutrality for the investors. Now, this tax neutrality concept has been followed by most of the countries as transparent, that is, a flow through direct and domestic and international tax purposes, which puts investors directly in the underlying assets of the fund. As discussed in the earlier video, UAE corporate tax regime intends to treat UAE and foreign investment funds that are structured as unincorporated partnerships as fiscally transparent. For these investment funds and real estate investment funds to be exempt from the UAE corporate tax regime, certain requirements are to be fulfilled. These requirements are: number one, the fund is regulated by the regulatory authority that is recognized by the Ministry of Finance, for example DFSA, Securities and Commodity Exchange Authority. Number two, group of 5 or fewer members, including the related parties, hold less than or equal to 50% of the economic interest in the investment fund. Number 3, any single investor and their related parties holds less than or equal to 20% of the economic interest in the investment fund. That means a single investor cannot hold more than 20% of the economic interest in the investment fund. And lastly, the interests in the investment funds can be freely traded in the stock exchange in the UAE or are widely marketed and made available to the intended categories of investors. Now with this, I would like to come to another important aspect of the corporate tax, that is free zones. Now free zones are considered as a key lifeline for foreign direct investment and foreign trade for the economic development for any nation. In the UAE, the first free zone, Jebel Ali, came into existence in 1985 and provided international business and corporations a hub which connected the East and the West and expanded the international horizons of their operations. Today, there are more than 24 of the free zones only in Dubai, with over 45 free zones all over UAE, providing a top-class facilities and infrastructure for doing business, and most importantly, are industry-specific in nature. Now, UAE has created many free economic zones that offer benefits such as tax holidays for 15 to 50 years, and some of the free zones are also provide renewable tax holiday period. There are no restrictions on foreign ownership. There is no restriction on repatriation of capital and profits, and even exemption from import duties on goods entering in the free zone is being granted to the free zone persons. Now, the UAE corporate tax will honor the existing incentives offered to the free zone person that maintain adequate substance and comply with the regulator requirements. Rest all the companies and branches that are registered in the free zone will be within the scope of the UAE corporate tax. Now I shall try to explain you to understand the applicability of corporate tax on free zones on 10 different types of transactions. Number 1. Transactions done by a free zone person to a business located outside the UAE will be taxed at 0%. That is, there is no tax on profit earned from outside the UAE by a free zone person. Number 2. Profit earned from trading with the same free zone will also be taxable at 0%. Similarly, profit earned from trading with entities by another free zone within the UAE will also be taxable at 0%. Number 4. If the free zone person has a branch in the mainland, 9% tax will be applicable for the income earned on its mainland sourced income at the branch. At the same time, only 0% will be applicable for all income other than mainland sourced income from such mainland branch. Number 5. If the free zone person doesn't have a branch in the mainland, still it will be eligible for 0% corporate tax for its passive income earned from the mainland. Now, passive income includes interest, royalties, capital gains or dividends from owing shares in the mainland UAE companies. Number 6. Many companies registered in the free zone have group companies on mainland income. Income from transaction with group companies located in the mainland UAE will be taxable at 0%. However, payment made to a free zone person by a mainland group company will not be a deductible expense in the mainland. It means indirectly it will be taxed to mainland at 9%. Number 7. If the free zone person located in a designated zone sells goods to the UAE mainland business, and such UAE mainland business is the importer of those goods on records, then the free zone person will be charged at 0% corporate tax. Which brings me to number 8. Income from certain regulated financial services directed at foreign markets, it will be taxed at 0%. Now, any other type of mainland source income earned by a free zone person other than what is being mentioned in above 8 points will be taxed at 90%. And last but not the least, if a free zone person has a permanent establishment in the mainland UAE, the free zone person will lose the tax incentive, otherwise it would have been eligible for a 0% corporate taxation. Now, more clarity is to be gained on the free zone taxation with regards to tax holiday periods granted to them and even its continuity, along with the current exemptions which are being granted to the free zones. As soon as any more information is updated by FTA on the same, we will surpass it on to you. I hope this video has given you an idea about the exempt persons and the free zone person taxation. In the next video, I will bring to you the calculation of taxable income, which will include the income to be included while calculating the corporate tax, along with the allowability and disallowability of expenses. Till then, stay connected and do like, share and subscribe to our channel to never miss any upcoming videos, and do share any queries or doubts to us and feel free to reach us. Link is shared in the bio. Thank you and keep smiling.